Mr. Mark Selby, how are we, sir?
Very good, Mr. Matthew Gordon.
It's been so long.
It's been
So
three
long.
weeks. Yeah. And
Yeah.
there's been lots of news coming now, so I think we have to get back to weekly-ish.
Yeah. Like I think we're going to talk today a lot about a lot of company news, which is fantastic, including Carlo Nichols updates as well. But we better start with the market because you've made some big calls about where this is going to end up at the end of the year. You still confident?
Still on track for 20,000, but as everything in nickel, there is never a straight line. So last time we had talked, prices had just touched 18,000, climbed, more than $1 a pound. I think we're sitting at about 17,500 or $8 a pound. After that big aggressive move, 3 weeks later, earlier this week, we touched back down to about the 15.5 level, which is $7 a pound. And then on Friday, we popped up a couple percent, back up close to $16,000. What's going on here is, I think this was one last push for the shorts to shove the market lower. We saw a slug of LME stock come in about 10,000 tons. Again, LME inventory is now sitting at about 147,000 tons. Thing to keep in context there, that's just over 100,000 tons from the bottom of it, where inventories bottomed in the summer of 2023. That's literally less than half of the surplus, quote, most analysts are still demonstrating. So, and on a weeks of consumption basis is less than 2 weeks worth of consumption. So again, yes, LME inventories are up, but they're a fraction of, quote, the reported surpluses in the market. And on a weeks of inventory basis, nowhere near there. And again, analysts had all these excuses about, conversion capacity and being able to make LME deliverable nickel. Well, guess what? There's lots, the Chinese have built lots of refineries now. This whole great conversion that we've talked about, that's, we're again in the final innings of that working through. And so, what? All the LME nickel that want to be produced, can be produced, and we're seeing it there. So again, still believe that the surpluses are overstated. I think the key thing here is around where, I think this is the gunfight at the OK Corral between the Indonesian government and the Chinese producers. And so, we're going to see over the next 2 months, I still believe that we're going to see this great squeeze in prices and end up back at $20,000 a ton.
Okay. Like you say, not a straight line, far from. And there's a lot of influencers there. None, not least of all, Indonesia. Little announcement by one of the Indonesian ministers there about their view about the nickel market. What can you tell us?
Since they banned ore exports in the mid 2010s, I've been saying, there is an ONEC equivalent of OPEC on the horizon. And so, yeah, no surprise. Now, when you control almost 2/3 of global supply of commodity, it's in your interest to limit supply so that prices are higher. So, quote unquote, we will fix the reference price so that it'll be proportionate between the industrial products and raw materials so that maximum products are not only obtained by the industry, but also by the miners. So just one key structural piece here is the way it's set up is, the mines in Indonesia are largely owned by Indonesians. There's been a bunch of Chinese who become Indonesian citizens to own these mines, but they basically, some of the big producers do have some of their own mines, but most of the ore is mined by Indonesian miners and sold to Chinese smelters. And so, they're basically dividing up who gets the pie between the Chinese smelter and the Indonesian miner. And given, the Chinese smelters, can't vote, it's in the Indonesian government's interest to make sure as many of those miners are happy. So they've really shrunk. They're not shrunk. They've limited the amount of ore supply growth. And again, in terms of what the government's doing, there's lots of actual data points in the market that are saying, yeah, no, this is really happening. So Tsingshan was reported to have cut production at their big Morowali complex because they don't have the ore availability that they want. The other big complex is Weda Bay. Aramet is a publicly reporting company. They had a big, in terms of the amount of ore that they were able to mine, they took a big cut in production from there. And we're seeing imports of Philippines, which were at 5% of global supply, now reach 8% of global supply. And right now, for the next 4 months, it's monsoon season in the Philippines. There was a massively and unfortunately damaging typhoon that went through a couple of weeks ago to get monsoon season off to a good start. And so you're going to see Philippine production drop by more than half. So and what's weird is the ore stocks really haven't dropped very much. And so I think the Chinese are lying about the ore stocks. They do this regularly in other minerals because the Chinese are trying to squeeze the Indonesian government to say, oh, don't worry, you know what, all your stuff's not working. Just give us all the ore we want. Trust us. We'll take good care of your ore resource and your country for you. And again, there's been a bunch of other things about Indonesians concerned about the amount of ore. They really want to focus on seeing more and more downstream and more value add from the ore that they're currently mining done in country. And so, you can't make up ore. And so I think over the next 2 months, you are going to see things squeeze, prices finally pop because the Chinese have been trying to sit on it for a while. And the nickel market's going to be a lot more interesting by year end.
Right. Okay. So a lot of data points to support your hypothesis and prediction of the 20,000 by end of year. What's the knock-on effect for Western miners? Ex-China, ex-Philippines, ex-Indonesia.
So the key piece here is I know some of the key China, have spent a bunch of time in the past with the key Chinese players. Their goal was global domination, and so once the price sentiment changes a little bit, you are going to see more Western nickel opportunities get some more attention, and so. I think the sad part is, getting back up to $20,000 to $21,000 a ton. That's great for where we are. Unfortunately, for BHP's Western Australian assets and some other high cost assets, that's not going to be good enough. But I think it will finally start to change the sentiment. That Indonesia is not this unlimited supply of ore. In fact, the Nickel Study Group, which is the most tends to be the most neutral arbiter of reports, reported that Indonesian mined nickel output was actually down in August of this year versus a year ago. Not much, by 1,000 tons from 178 to 177,000 tons, but still, there's. And I think once the market realizes that Indonesia wants to be a disciplined player in the market, that they're not just going to let the market continually get flooded for whatever amount of nickel's required. I think you're going to start to see sentiment change. Now, again, because the news flow was so negative, I don't think this is, we're going to wake up, prices pop to the $20,000 on December 27th and January 6th, nickel stocks are going to be up 50%. Given how negative sentiment was, I think it's going to take a while, for it to come through. But as I said earlier, we're starting to see some bigger money guys who are, contrarian, looking for the contrarian opportunity, that are starting to sniff around the nickel space. And so, I think things will finally start to get more constructive as we get into the new year.
Right. And just sticking with the kind of ONEC, the organization of nickel exporting countries.
Yeah.
The Western producers are going to be looking at that kind of controlled production, because when they're talking about, maximize profits for industry, but also miners, they're talking about their own backyard, Indonesia, right? For the West, do you feel that there's going to be this heavy reliance on this narrative around domestic production, green production, and possibly looking to help subsidy. We'll talk about this a little bit when we talk about your company, but subsidizing companies to be able to do that, or does it go back to a very kind of primal thing of we will buy it wherever it's cheapest? How's it going to play out?
No, I mean, at the end of the day, again, no matter who wins the U.S. election Tuesday night, both sides is one of the only things that both the Republicans and Democrats agree on. We can't let China and any sort of China proxies control the supply of critical minerals that make our modern economy function. It's just this giant lever that China has over North America. Again, I think they'll wield it when they invade Taiwan at some point, as the big stick. And so um, they again, that's the opportunity here in nickel, is that investing in oil outside of OPEC in North America elsewhere was a pretty good trade in 1973, 74 for a good 15 or 20 plus years. Investing in a commodity that's being managed effectively by a group. Again, OPEC overdid it, and it had repercussions. But Indonesia's done a pretty good job over the last 6 or 7 years in terms of maximizing value from the resource. And you've got all of these Western governments who want to see mines and processing plants being built in friendly countries. I think at our last call, the Department of Energy had just splashed out $3 billion on a bunch of domestic critical mineral production opportunities. Germany just announced earlier this week they're going to fund mining and processing projects that help provide feed for German companies. And you're going to continue to see more and more of this. Governments are going to throw more money, throw more incentives, raise more tariffs until they start to see the mines and processing plants get built for these critical minerals in friendly countries. So again, I think that's a once in a generation opportunity to make a lot of money.
Right. Okay. And I think one of the things that was kind of fueling a little bit of doubt and uncertainty, exactly the last time we spoke, and maybe a bit before that too, was the EV sales not quite gonna live up to expectations. Apparently, what's the reality?
Yeah. So start of the year, nickel's horrible. Again, prices almost double the last bottom, but still okay. And EVs, no one's going to buy EVs anymore. It's all done. It was, so, year to date up 22%, September, a record month, up 30% and a new all-time sales high. Now, again, there's been a shift. So, full battery EVs are up 12% and plug-in hybrids are up 45%. But again, the horse is out of the barn, is heading this way, and you still need a battery in a plug-in car, because you still have a internal combustion engine in the car. You can't afford to have a big bulky battery. So nickel, there are nickel batteries. There's a 60% higher voltage chemistry that seems to be one of the preferred battery chemistries for these plug-in hybrids. Again, China's still dominating growth, but again, North America, read the headlines. Ford just shut down production of their F-150, for 2 weeks. Sales are up 10%. People aren't buying Ford Explorers, but they're buying lots of Hyundai, Kia, lots of other brands of electric cars. Rest of the world sales are up 28% year over year, and they're now over 10% of the market. And even Europe, which has been negative all year, again, because the German government, which is the biggest car market in Europe, changed subsidies, so it pulled sales forward and caused sales to drop. They were up 4% in the month of September. So we're now sort of on that, past that effect, and again, Europe sales are magically going to be going up again, because the rest of the rest of Europe was still buying a lot of cars, and so you'll see things in the 10 to 20% range going forward, which is fine, because again, analysts didn't have forecasts anywhere near where things are growing. They're still, still sort of under forecasting the amount of nickel that's required, and so it's just a little closer to where reality is. And again, EVs are going to, the numbers will start to look better through the end of the year and going forward into 2025, particularly as interest rates drop in a bunch of key markets globally. And for a lot of people, buying a car is a big thing, and it's very interest rate sensitive. So when interest rates drop, people start to buy more cars again.
Right. Okay. And obviously, people, we just use this blanket term nickel, but there are lots of different types of products that available. China is usually a big buyer of precursor. Is that still happening, given your comment earlier about maybe not being sure of the information that they're putting into the market?
So the key, one of the things that I think some market commentators are missing is that a lot of the non-Chinese car producers are using battery materials produced in Korea. So, even if you're not seeing the growth in nickel use and precursors, and again, part of that's driven by still destocking of that entire battery supply chain because lithium prices have tanked so much. But the other piece of it is a lot of the precursor cathode productions is now happening in Korea. So that for making nickel containing batteries, that is increasingly happening, more in Korea. The other part, stainless steel is still the other giant behemoth in terms of nickel consumption. International Stainless Steel Group, again, this is the thing that drives me most crazy about analyst forecasts in the medium to long term. They have stainless demand dropping to 3 to 4% growth annually. First half this year, China super slow, high interest rates globally, and stainless steel production is still up 6%, first half year over year. And it's actually grown in the West, and not just China. So when you use 5 to 6% stainless demand over the long term, when you use reasonable EV demand growth rates, nickel demand, we did 10% growth through the first 3 years of this decade. We're going to see growth rates pretty close to that. And if we're anywhere close to that, we're going to be, way short of nickel, in the remaining part of this decade.
Right. So hold steady with nickel. It's a coming. It's time to make some money. Okay.
It's a coming. Yep.
Right. Okay. Well, we better talk some company news. As I said, it's been busy out there. Not least of all, you guys. Let's start with Canada Nickel, if you don't mind. But we're going to run through more than a handful of companies after that. So you made several announcements. Where do we start?
Yeah. So again, continues to be a pretty busy fall for us. So our last exploration update was on drilling at 7 different properties. This time, results on 5 different properties is great. So one of the properties, Man West, shaping up to be pretty nice, chunky deposit. We've drilled off 1.7 kilometers of it. It's a minimum 600 meters wide, which is double the width of Crawford. Down to at least 400 meters there. Again, if you want to do the math in terms of the resource, take those 3 numbers, multiply them by 2.6, which is the density, and you get a sense of what the resource there could look like. Man Central also shaping up to be a nice large deposit. Some nice, good, more infill results from Reed as we head towards our resource later this year, and then good results. Peridotite's always lower grade than dunite, so they're not going to be the kind of better grades you see, but again, they're decent grades for peridotite in this area. So excellent results. Again, a lot of companies are lucky to have one good project. Great to have 2 projects. We are unlocking a district. This is to be able to have productively drill 5 properties. Is pretty unique and speaks to the potential of Timmins.
Yeah, and I think people are getting the message about the process that you are engaging with to unlock a district, because that usually requires a very big balance sheet and a strategy that's deliverable. So, well done on that. And obviously, people maybe need the story. Can you just give us a quick 30 seconds on Crawford and what exactly that looks like and where that kind of sits in global, potential global supply?
Yeah. So Crawford's second largest nickel reserve would be third largest sulfide operation globally. Western world, in today's geopolitics, Western world's largest nickel sulfide operation. So, and we think we have multiple Crawfords in this area. So, it has again, one of the few places where we're discovering lots of nickel. And part of this good story is attracting great people. Really, really excited to have Julian Ovens come on board. I encourage you to take a look at the release. Tremendous background and a huge ad at this point. He's a partner at one of the biggest government relation firms in Canada, but he's just not a politico. He was chief of staff to a bunch of key ministers in the current federal government. So well respected in Ottawa and knows his way around government. And, he worked at, these tiny little companies called BHP, Rio Tinto, and some senior corporate development roles for a while. So, a guy with that kind of track record, that kind of pedigree. Again, we've got a pretty good board already, but, to have somebody like that come on board at this point in time is a tremendous add tremendous add for us, and we're very excited that he's come on board.
Yeah, well, crikey, well done. Yeah, I think guys like that have choices, don't they? They're very careful what they're stepping towards. The thing that kind of caught my eye as well, and it was just before I sort of trotted off to Los Angeles. I actually saw that you've been awarded this $4 million from the federal government, just tightening up. Well, one, endorsement, obviously, but two, sort of tightening up on this, how this thing moves forward in terms of funding. So, how did that come about?
Yeah, so this is great. So there's $1.5 billion in this critical infrastructure fund. There was a much smaller portion of it that they were giving out for engineering studies, pre-work, to be able to build the infrastructure. So, the $4 million number was good. It was one of the bigger checks that was handed out. Magna Mining also got some good money, and there were some other companies that got some funding as well. The key thing there is, if they're funding the pre-engineering and there's money available to build it, which this fund is designed to do, that puts us, pretty good shape to be able to get more money to fund it. So, as I talked earlier in this year, you're going to start to see, the money start to flow from government. And I think once you see more and more of that come through, people will really, understand what that opportunity is in terms of, getting that equity funding, not equity funding, very non-dilutive funding from the government come through, which is good. And again, as the rest of this year goes on into next year, you're going to see more and more announcements on that front for sure.
Okay, on to Power Nickel. They're hunting down a second lens, a second discovery. What can you tell us about what they're talking to the market about?
Yeah, it was great. Like literally the last 3 weeks is probably the busiest 3 weeks we've seen in a long time in terms of nickel news, which is great to see. And yeah, in Power Nickel, Terry's doing some more exciting drill results. So they're continuing to expand, that existing lens. Best result to date, 40 meters of 2.5% copper and, almost 5 grams a ton platinum group metals, which is great to see. They think it's open in a couple directions. Good to see. And they've got some, very serious exploration help to help them delineate it. I think they've identified a bunch of targets, along the structure that's there. So, exciting and good news to keep an eye on. Other good news, Talon. So they picked up a massive land package. This property was originally owned by Henry Ford at one point, and is a bunch of private land up in Michigan. And they drilled nearly 100 meters of nickel copper mineralization at their first hole at one of these targets. This area is right near the only operating nickel mine in the United States called Eagle. Again, great to see new discoveries. We'll see what the assays come back at, but kudos to the Talon team to continue to try and find more nickel in the U.S., which the U.S. government is super focused on. At the other end of the value chain, FPX, again, they continue to really build solidly and have done a great job advancing the project. They just finished pilot plant where they took the concentrate that was produced in the pilot plant to produce the concentrate, and went and made some very clean nickel sulfate production. One of the benefits of these ultramafic deposits like ours, like FPX's, is they produce a very high grade concentrate that doesn't have a lot of other elements of the periodic table in there, and so it allows you to make a clean product relatively more cheaply than a lot of other type of concentrates and processes. So good to see them clearly demonstrate that for their project.
Right. I mean, there's loads more to talk about. Because it keeps coming. Nickel's like back in fashion. SPC nickel whacking out some high grade too.
Yeah, so a couple of ones we've been following for a while. So again, they're infilling. They're on the West Graham. This is open pittable in the Sudbury Basin. Again, best hole probably I think from that deposit near surface, 1.5% nickel and 0.3 copper over 10 meters. So very good to see that again within a wider lower grade interval. Premium nickel that we've been talking about as well. Good step out drilling outside the additional resource envelope. That's going to be key there to help build the scale of what they've got there. And then when they made the acquisition of those assets, there's a second deposit there. It's more of a larger bulk tonnage operation, but what they're doing is going through and re-assaying some of the historic drilling, because they didn't always assay for PGMs, and so they want to incorporate that all into a new resource. So, again, I think it was 180 meters, 0.48 copper, 0.4 nickel, and about a gram of PGM. So, again, good to see that. We'll see how that plays out, what that resource looks like when it's done. Nickel 28, again, right now, one of the cheapest ways to get nickel exposure in the market. Today, you've got a new team in there. It's a little more shareholder friendly. Ramu, their main asset, has been churning out production pretty consistently. It was lower this quarter, but it was just due to scheduled maintenance. So I don't know if the share price reacted negatively, but if it came off a little bit, would be a good time to pick up some more. And nice, another new discovery in Newfoundland, and another ultramafic, which is good. No assays yet, but they had basically longer intervals with some visible warite. So early days there, but we'll see what happens with that one. So and then on the other side of the world, over in Australia, structurally a little sad to see. So Poseidon Nickel, it has the only other large nickel mill in the Kambalda, sort of central nickel area there in the Kambalda, Kalgoorlie area. And they're being acquired by a local gold company who are looking to convert that mill from nickel to gold. There was another mill that they had before, which was at the Emilian. It was originally, I can't remember the name of the company that had it, but that mill is looking to be converted to lithium. So it's sad to see Australian nickel capacity continue to be derated. What it just means is going to be, if you don't have mills already, it means that mines are going to have to justify building their, to be big enough to justify their own mill, which was always one of the advantages of those deposits, is that you did have a couple mills nearby. Good thing is, one company that is continuing to build on a discovery made about a year and a half ago, Mulga Tank, again, another lower grade ultramafic, but getting some good average grades, and at one contact, starting to see, seeing some decent grades at the contact, which should be a little bit of juice, as they continue to advance that project. So good on Western Mines Group to continue to push that forward.
Brilliant. Well, like we told you, we talk companies today. We definitely did that.
Yes.
There's a few we have spoken about in the past, which we haven't spoken about recently. It might be worth having a look at the likes of Giga and sort of see how they're getting on up there, up north, as we say. It's probably well. And a few other sort of little tiddlers. Mr. Robin Dunbar, what was he? Does he still have nickel in his somewhere?
Yeah, he does. He's got the
lithium.
Lithium, and then nickel deposits in the Manitoba area, close to where their lithium deposits are. So
let's have a look at those guys and see what they're doing soon. Well, look, Mark, brilliant. Jeepers creepers. We got to do it more regularly, but it's nice to have a kind of like a slew of news like that. As ever, fascinating to talk about the kind of drivers for price, and we're running out of runway. So where are we now? November.
Yeah.
Whoa. Yeah. I thank you for your time, sir. We'll see you soon.
See you in a week and a bit.
See you in a week and a bit. Cheers.